Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, March 10th, 2021, and I'm pre-recording this Trading Places Live for Thursday, March 11th. Futures currently are down a bit. We'll see whether or not that continues overnight, but they are down just slightly as I do this recording. Got a pretty full schedule. Got a lot to try to get through, so I'm going to be moving through pretty quickly. But I'll go through that agenda with you very quickly. First, we'll go into the daily market recap. Then talking technically. I got a little surprise there I'll talk about in just a few minutes. Then we're going to do chart lists and scans. Got a interesting scan that I think you might enjoy. Kind of brings in fundamentals and technicals, and seasonality as well. So I'm going to go through that, show you how we can use some of our research at Earnings Beats to hopefully zero in on some really solid candidates using those criteria. Then we will get into the earnings spotlight and wrap up the show with 3 you must see. Before we get into any of that, though, I do want to take you over to earningsbeats.com, where you can sign up for our free newsletter. All you have to do is type in your name, email address there, and hit that subscribe button, and we'll get you set up. It is most of the newsletter articles are based on relative strength, earnings, those types of things. It is a completely free newsletter. There are no there's no credit card required. There's you can unsubscribe at any time. So I think it's a great way to maybe get a little bit more of a feel for how we look at the market at Earnings Beats. Also, I'd love to have you sign up for a trial. It's a 30-day no-cost trial. You do pay $7 up front, but we will refund you that $7 within a week or so, so you can enjoy our service for 30 days at no cost. A lot of great information. I know looking at the portfolio performance, ETF and stock, we've actually outperformed the S&P 500 on all of our portfolios since inception, although this quarter gotten off to a rough start. Not so much on the income portfolio. We've had a great start here in the quarter, but the other 3 are a little bit more invested in growth stocks, which obviously have not done well so far. But you can check out all those portfolios, all of our research platform, and all the education materials that we offer our members. Again, that's a 30-day no-cost trial. Let's move on to the daily market recap. Dow Jones Industrial Average finally did it. Closed over 32,000 for the very first time in history. The Dow was up 464 points on Wednesday. S&P 500 up about 0.3%, 23 points. We were back above 3,900 intraday, but we failed to close there. Finished just below at 38.98. The NASDAQ, kind of a little bit of a rough day again. We started off okay, but we pulled back, failed to break through that 20-day moving average. That's something that I'm currently watching. I want to see if we can get back up above those moving averages. Until we do, I think you have to maybe look at the NASDAQ with a little bit more of a cautious glare. But I think eventually we'll get back up above it, but it may take some time. And March normally isn't a great month for the more aggressive areas of the market, including growth. So value may be the way to go, but we'll talk about that some more during the show. Mid caps did go up about 1.4% today, breaking out to another high. Small caps set a new all-time high today, rising more than 2%. Small caps absolutely been on fire. Dow, as I said, just broke out to new highs, but you can see the small caps have been doing it now for a while, really continuing strength there. Energy, the strongest among the sectors. After taking 1 day off, little profit taking, we came right back. Energy up 2.5%. Financials up more than 2%. I just think the overall environment of having rates rising, even though they didn't rise today, just the fact that we have been moving in that direction. The spread has been pretty good, and if you follow the banks and some of the other financial areas, anytime that yield spread is increasing, that generally is a good sign for the financials. Technology, worst performer. I believe that was the only sector down today, down 0.4%. So not a very good day for technology again. And like the NASDAQ, you can see the failure at the moving averages. I think you have to respect the trading below those moving averages until we get back up above it. So unless you see positive divergences emerge, I think from a short-term trading perspective, you need to be a little careful with technology until we get back up above those moving averages. Couple positives that I saw in the market today. First of all, the Dow breaking out to a new high, along with the transports, I think is incredibly good news, very bullish, adds to the secular bull market theme that I've been speaking about for many, many months, really going back several years, but especially, throughout the pandemic, talking about how this was still a secular bull market. Well, now we've got the Dow Jones joining the party again. Anyhow, aerospace. Look at aerospace making up a breakout on an absolute basis. Now, this is not a group that has been doing overly. It hasn't been doing that great on a relative basis. But on an absolute basis, you can't really start to lead on a relative basis till you begin to break out. And so, I think this is a great first step for the aerospace group, moving up above the 1500 level and taking out the high that we saw a few months ago. And then drug retailers. You can't really see it too well from this chart, but that was a new closing high today, getting up and closing at that 835 area. So both of these groups up more than 3% today, helping to lead the charge. All right, moving on, 10-year Treasury yield. Just want to mention here, first of all, that we do have one economic report out in the morning, initial jobless claims. The expectation is 725,000. Last week was 745,000. So we're looking for a little improvement there. 10-year Treasury yield, this is what I was talking about with the financials. I mean, we're in a nice uptrend. And anytime we get in these trends like this to the upside, that generally bodes very well for financial stocks. So don't, don't expect, outside of maybe a little bit of profit taking, I really wouldn't expect too much of a pullback in that financial group. All right, let's move on to talking technically. And I tell you, I got a lot to get through here, but I wanted to show you first the Dow Jones making this breakout right here above the late February high. Another breakout, first time above 32,000 in history on a close. That was all good news. Transports, this gets back to the Dow theory. Transports also set a new high. So you've got the Dow Jones Industrial Average making a new high, transportation average making a new high. That adds to the bullish theme here. Now, I am going to go very, very quickly, and I'm going to try and get through the 30 Dow component stocks, looking at a 10-year weekly chart. So I'm going to go through it quickly and just give you a sense of whether I'm bullish, bearish, or neutral, these stocks. Looking at Apple, Apple's just been a great performer. In the long-term picture, I think you can see it's been very strong. AD line remains pretty good here on a weekly basis. The group has just been on fire to the upside, of course, being led by Apple. And you can just see the relative strength has been solid. But we've seen so much strength, we may see a little bit more short-term weakness. As I said, March, not great for technology stocks. So I'm going to give Apple right now a neutral. I think it's long-term bullish, but I think short-term neutral. Amgen still getting in a very nice uptrend. It's been a little bit slower than a lot of the other areas of the market, especially technology and consumer discretionary. But overall, the trend remains higher. I think the stock looks pretty good. Relative to the S&P, I'd like to see it hold this area down here. This gives me reason for pause. We've just been underperforming the S&P for a while. So I'm going to give Amgen just a neutral reading. American Express, love the recent breakout. Absolutely love it. I think American Express is now joining the party. On a relative basis, it had been downtrending. I think that is starting to change. I'm bullish American Express. Boeing making a nice move here. I think Boeing's got a lot of hurdles ahead. So short term, I like what it did closing in a new high today. I think it's got a shot to run up to about 280, 285 potentially. But I would watch this trend line and I would watch the prior support, which will become resistance up around 285. So short term, I'm bullish. Long term, I'd be a little bit more cautious. I'll say neutral. Caterpillar, love it. Look at the chart. Look at the AD line. Look at the relative strength. One of my favorite charts in the Dow. One of my favorite companies, I should say, in the Dow. I'm bullish Caterpillar. Salesforce, AD line going up. Overall, this is a nice trending chart to the upside. My problem is, first of all, on a relative basis, software is the lowest level it's been now in about 7 or 8 months. And you can see that on a relative basis against both the software group and the S&P 500, Salesforce has been declining on a relative basis. So I'm going to have to go with more neutral, maybe even short-term bearish on Salesforce. Cisco, and long-term bullish though. I really like Salesforce longer term, but I think you might get cheaper prices. Cisco's starting to strengthen. I like what's going on here. AD line fine. We set the top back in the middle of 2019, really struggled for about a year and a half, but you can see all of these tops coming in here at about $48, $49. Cisco can get back through that and start trading into the 50s. I think we're starting to see a little bit more relative strength, and the group overall telecom equipment beginning to show some strength as well. Chevron. Well, the move recently, very bullish, obviously. I think we've got a little bit of room ahead, not much, maybe another $4 or $5, and then we're going to hit all of this overhead resistance from 2018, 2019. Now, Chevron, relative to its peers, has been very strong, but its peers have not been very good. So you got a really solid stock in an area that hasn't been a great performing area for a long time. I like Chevron here in the short term. I think it's going to make a little bit more of a move. I would move it to a neutral if it gets up to that 116 level, and then wait. I want to see that breakout. Disney, one of my favorite stocks. Love Disney. Earlier this year, beginning of the year, I called it my favorite stock in the Dow, and nothing here is really changing my mind. AD line strong, stock is strong, relative strength is strong, the group is strong. I mean, there's really not anything not to like here. Very bullish Disney. Dow Holdings, definitely strengthening here over the course of the last year off that pandemic low. It has broken out above the prior highs, showing some relative strength here. I'm bullish on Dow Holdings. Goldman Sachs also breaking out above this triple top, which had formed over the prior few years after sideways consolidating. You can see the relative strength turning up. I'm bullish Goldman Sachs. Home Depot, kind of just meandering, I guess, is the best way to describe it over the last 6 months or so. Markets continued going higher, but Home Depot has not. And not only is it losing ground versus the S&P, but it's been losing ground to its peers and went down and hit a major support area going back the last 3 years. So I don't want to see Home Depot turn lower here. I'm going to say it's neutral for now, but if it doesn't hold that relative support level, I turn bearish. Honeywell, and when I say bearish, I'm talking relative to the other stocks in the Dow. I'm not talking about shorting the company. I believe we're in a secular bull market. I would not short anything. Honeywell broke out back in at the end of last year, toward the end of last year, fourth quarter, when it was added to the Dow. I think overall the relative strength looks good. Its peers are starting to turn up a little bit versus the S&P 500. I think that'll help. I'm bullish Honeywell. IBM, couldn't be more bearish. AD line, one of the weakest. I mean, just look at this chart. It's done nothing during a 10-year bull market. There's just no reason to be into a stock like this until it begins to show some relative strength, which it's showing none right now. I'm bearish. Intel has been actually performing better. I think it's a little bit more of a value stock, so it's been benefiting here, I think, from some of the rotation of late. Short term, but I still think there's a top in 2020, early 2020. We got to negotiate at about $67. We're almost there, so I'm going to go with a more neutral rating right now on Intel until we get the breakout. Johnson & Johnson, sideways consolidation, finally made the breakout the end of last year, has pulled back. AD line looks good. I actually like the stock. With on a relative basis to the S&P, not great. Its group not great, but relative to its group, it's one of the leaders. So I think this pullback after a lengthy consolidation is actually an opportunity. I like Johnson & Johnson. JP Morgan, one of my favorite banks. Certainly, the breakout here looks bullish. AD line strong. Banks just broke out. So, and you've got JP Morgan rising relative to banks. Not a whole lot here not to like. I'm bullish JP Morgan in 2021. Coca-Cola, AD line looks good, but price not so much. Not yet. We were strengthening. We pulled back. Now we're starting to turn back to the upside. I think we got a little bit more consolidation to go here. We've got room potentially up to about 58, but we also could pull back into the upper 40s again. I'm just going to go more with a neutral rating on Coke at this point. McDonald's AD line strong, price action you can see coming across here. Set a new high back in the fourth quarter. Pulled back since. I will say this though, restaurants just making a breakout, trying to make a breakout here. So watch McDonald's, because I think if the group can make this breakout and we begin to see a little relative strength, that this right here is a key. McDonald's relative to the restaurants, because right now we're at about a 4-year relative low. This has to turn back to the upside. So watch for a breakout. If you get the breakout, increasing relative strength, I'd be bullish. Right now, I'm going to say a little bit more neutral on McDonald's. 3M starting to strengthen. We got a lot of overhead resistance still to go, though. I think this is a very lengthy consolidation period. I think relative to its peers, relative to the S&P, not good. I'm going to say neutral on 3M. Merck, AD line good. Nice move up here. Got to go to that relative strength, though, line, which has been moving lower. Hasn't made the breakout, consolidating. I go neutral on Merck. Microsoft, great software company, obviously. AD line strong, relative strength overall pretty strong. The group hasn't been great, but Microsoft, I think, is going to power ahead. I'm going to give it I'm going to go from maybe lukewarm, maybe not quite bullish, but more than neutral. I think the stock goes higher. Nike, big breakout. When I picked Disney at the beginning of the year, Nike was kind of a second choice. It's pulled back here a little bit. Personally, I think that's an opportunity. I think Nike goes higher. AD line, everything on the chart, relative strength looks good to me. Procter & Gamble set a high in the fourth quarter, has pulled back quite a bit, but it pulled back to the breakout level. So I'm okay with this one at this point. It's pulled back on a relative basis, pulled back on an absolute basis. I think that's creating an opportunity. I'm bullish Procter & Gamble. Travelers making the breakout finally, about a year and 9 months in the making, or a year and 8 months, whatever. AD line still strong. The group's picking up. This stock is picking up relative to the group. I'm bullish Travelers. United Health, AD line strong. Price keeps moving higher. Relative to its peers, very strong. Only problem is peers have kind of been going sideways for a while in healthcare providers, but stock looks good to me. I'm bullish. Visa, AD line strong. Price action just breaking out. I think that is a great sign here for Visa. Visa relative to its peers trying to break out as well. I'm bullish on Visa. Verizon Communications, AD line strong. This one's going up, but it's a very slow gainer. So it's probably better, if you're a little nervous about the market for whatever reason, it's probably a good stock, to consider, especially with the recent pullback. But don't be looking for a 10 or 20% gain this year, because this is not the type of stock that generally does that. Maybe 10%. That would be maybe the top side. So I think Verizon I'm bullish, but I'd probably lower the bar a little bit on a stock like Verizon. Walgreens Boots Alliance, WBA, talked about the drug retailers starting to make a move to the upside. This stock closed at a new high dating back probably about the last year or so. I do think it's beginning to strengthen. Its group is trying to come off the ground. This is another one kind of like Verizon. It can move a little bit faster than Verizon, but it is a more defensive play. Walmart, and this is the last one. Walmart been in a nice uptrend, but has pulled back recently. I think short-term neutral, but longer-term, I'm still very bullish on Walmart. Maybe watch for this trend line test. If it comes back down another few dollars into the 120s, I think that could be a nice entry point into Walmart. All right, let's move on. That was all 30 of them. And, as you reflect back, I like most of these stocks, most of these charts on the Dow, I think are pretty bullish long-term. Yeah, they'll probably rotate and you'll see some money going back and forth. But overall, I'm looking for most of these stocks to continue moving higher. And if the component stocks look good and they're moving higher, then you need to expect the Dow to move higher. I think it all fits in the secular bull market theme that I continue to talk about. I think the Dow is going to see another few thousand points this year. I would not be surprised to see 36,000 by the end of the year, maybe even more. I'm bullish the stock market in 2021. All right, next thing I want to do, let's move on to chart lists and scans. What I did is pulled together 4 different chart lists that we have at Earnings Beat. Strong earnings. Well, we have 2 strong earnings charts. We have so many, we couldn't fit them on one chart list, because chart lists can only contain up to 500 charts. I think we have 526 companies now on our strong earnings chart list. So using those 2, using March seasonality. So these are stocks that we provided to our members that tend to perform well in March. And then raised guidance. These are companies that have been, that not only reported recently, but raised their guidance going forward. And so we keep a chart list of that. So what I'm doing is I'm just looking for common denominators. What companies have posted strong earnings, have raised their guidance, and also enjoy strong March historically. And when I ran this scan, or when I run this scan, there are 3 companies that come up: Amazon, Activision Blizzard, and Take-Two Interactive. Both these last 2 are in the internet. Amazon, broadline retail. Scooters, though, are very weak. So that's one thing I would caution, is that we do need to be just a little bit careful on the because the scooters, they haven't been in favor. That's how you get low scooter scores. But let's look at the charts, because this is a month where seasonally we tend to do pretty well on Amazon. And you can see all of these lows coming across for the last several months are at 2,900. Last Friday, we tested that area, came back up, closed at 3,000. So if we see more weakness on some of these growth stocks, as Amazon gets closer to 2,900, just at least be aware that that support level is there. We could see a bounce off of that 2,900. It could be a long-term bounce. I mean, we might head all the way back up, test the highs, 3,500. So watch 2,900. I think that's where you can keep your stop fairly tight. All right. The next one that we had was Activision Blizzard. Activision Blizzard gapped up back in February, came back down, failed to hold gap support. However, look at the high here. That is about $88. When we broke out above, solid volume, we came back down. Where did we pull back to? $88. Earlier this week, the low, where did we go down to? About $89. So, we were up at near 105 recently. So as we get closer to 88, 89, you could potentially take a shot. Again, this is a stock that historically does well in March. It hasn't so far, but historically it does. So if it bounces off that 88, 89 level, could give us a really good signal there. And then the final stock was Take-Two. So let's pull that one up again in that internet space. This one's a little bit more challenging. I don't like the way this chart looks at all. The PPO pointing straight down. Momentum is accelerating to the downside. Lots of failures. Not even able to reach its 20-day moving average about a week and a half ago. So this one definitely looks challenged to me. I would say, recent lows coming down here near the 150 level. We certainly could move into that area, which would be another 8% or so down from where we are now. The only other thing maybe to look at is to see on an hourly chart, maybe if it moves lower, does it set a positive divergence? And you can see that the hourly PPO is much higher. So if we go back down below that 161, 162 low that we saw a couple days ago, then yes, maybe we do print a positive divergence, watch for a reversing candle, and then maybe we get a short-term move to the upside. I'm not ready to look at a long-term, because the hourly may just give us a temporary reprieve from that daily chart, which looks very bearish. So we might just simply move back up into the low 170s, maybe get a $10 pop or something, and then back down. That's the way I would evaluate this chart. So not very bullish. I like the other two better than Take-Two. And quite honestly, I don't like any of them until they either hit support or start to show more bullish characteristics, like getting above their moving averages. All right, let's move on to earnings spotlight. So after hours, we did see Oracle come out. Oracle beat their bottom line, beat their top line as well. Bottom line, $1.16 versus $1.11. You can look at the stock, made a nice move pre-earnings, going into earnings, really good move to the upside. That's always a good sign. So they beat. After hours, though, they're down 5%. I think they were down about $3.50, something like that, maybe $4. That could take us back to about 68 on the open. Watch that rising 20-day and watch support at about 65. I think that combination, 65 to 67, is very strong now on Oracle. So if we do gap lower in the morning and we trade down for a bit, I think Oracle is fine to begin to accumulate. This was a good report. So I think it's built in. Maybe we're going to get a little sell on the news. But at that point, I would be fine with Oracle. And looking on a relative basis, let me pull up a relative chart for you. Whoops, that's not the one I wanted. So on a relative basis, well, the AD line's not particularly strong. And that's not my primary indicator. I would feel better about a stock that I went into if the AD line's strong. It's not that I won't buy a stock with an AD line that's weak. I just want to be I'd probably be more careful, so that I'd make sure I keep my stop in play. Close back below 65. I probably wouldn't make any excuses. But other than that, I probably would ignore the AD line based on what I'm seeing in terms of the volume, the breakout, and all of a sudden the relative strength. Now it's in a weak software group, but it is really showing a lot of relative strength, not only software, but also versus the S&P 500. All right, one stock that is getting hit pretty hard in after hours after reporting earnings is Cloudera. So CLDR, the stock reported pretty good numbers. Bottom line, 15 cents versus 11 cents, but they lowered their forecast for the year. And as a result, they are being hit pretty hard, down 11% after hours. So this 1473 you're looking at is likely to be more like about 1320 tomorrow. So we'll see where we open. But if we do open around 1320 or so, I mean, looking back, I mean, we're losing all this support from the past couple of months. I don't know. You know, when you get the gap down, you're going to have a lot of market makers that are going to be long. So I would expect a gap down, maybe a rally, but that rally is likely to fail based on the way this stock has been trading. Looking on a relative basis, this was a pretty strong stock until about a month ago. And all of a sudden, when growth started getting hit, the stock fell apart to the downside, lowering guidance as we go forward. And maybe that's going to be a theme. Maybe that's why we're beginning to see some of these software companies underperform. But I would just continue to watch relative strength, watch key support levels. This one, I think, has already lost support, which I would have said was around $15. So I don't really like the way Cloudera is trading. I'd be a little careful here. Let's see. How about we do, well, one last one real quick, which is AMC. They reported after the bell, lost $3.15. Market was expecting them to lose $2.80. You can see it's been a crazy ride, heavily shorted stock. It is up 5.7% after hours. So it's not a breakout. You need to get back through about $11 to get a breakout, maybe even a little higher than that. But this is one that could run. I mean, you get back up above that $11, $12 area, and you could quickly see another pushback to $20. These heavily shorted stocks can still move very rapidly. All right, let's move on to the three you must see. I wanted to pull up three stocks that are making breakouts, but their scooter scores are pretty low. So here's Jacobs Engineering just making a breakout, for the most part, mostly sideways consolidation. So I think this is a stock that has some room to run. Then we've got MSM. I think this is an industrial supplier, just making a breakout after 3 months, sideways consolidation. Volume ticked a little higher. I think MSM looks pretty good. And then the final, that's not what I wanted. They reported. Let's see which one. I wanted to look at Toll Brothers. So then there's Toll Brothers, and you can see Toll Brothers here making a breakout after sideways consolidation. We broke out above the October high, pulled back, tested it, tested the 50-day, and now we're moving back up, breaking out. Very good action on Toll Brothers. So those are three stocks breaking out to new highs after recent consolidation. Look pretty good. All right, that's it for me. I appreciate everybody tuning in. I'll be back next Monday over at Earnings Beats for your next Trading Places Live. Have a great Friday, everybody. Enjoy your weekend. See you on Monday. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.